So that's where making sure you've got a policy and really an insurance broker that understands the industry, understands the type of allegations, because people will get hurt. I mean, it's just like if you go to any soccer field in the country on a weekend, some kid is going to roll his ankle, break his leg, get hit with the ball, something will happen. Now, does that mean it's the field's fault? Does that, if he gets stung by a bee, he was playing soccer, is it the field's fault? Are they supposed to eliminate all the bees? You cannot eliminate all risk. But what you can do is find a partner and a risk management provider that understands what you're doing and will support you in your growth so that when those incidents happen, you're prepared, you're equipped to fight them, defend them when necessary, pay when necessary, and then make sure that you're set up for future success as well.
Hey everyone, welcome to the Roe Show. This week we have Charlie Holderness, who is an insurance strategist for the insurance giant Marsh & McLennan Agency and works specifically in the high-risk sector. Anyone in the gymnastics and trampoline park industry knows very well that insurance is a hot topic, and unless you structure your insurance policy the correct way, you may be left exposed to increased risk. Charlie is an expert at thinking about insurance differently and talks with me about how any traditional gym, park, or high-risk business can partner with their insurance provider to help protect them. Many people get negative feelings about insurance, but when looking at it through Charlie's lens, you realize that treating your insurance company as an investor is really the best way forward. Charlie also gives his thoughts on the litigation culture in America compared to other parts of the world and describes some of the mistakes first-time business owners make in the family entertainment market when devising their policies for the first time. If you're about to open your own trampoline park or gym, or if you have already had a facility and want to readjust the way you work with your underwriters in the future, then this episode's for you. Okay, everyone, let's go. Hey, Charlie, thanks for coming on to the show. How are you doing?
Great, man. Thanks for having me.
Yeah, no, it's great. You have definitely a very unique skill set here that I think the whole industry definitely wants to hear a little bit more about. And before we jump into it, can you give us a little background on what you do and what you do at Marsh & McLennan?
Sure. So my name is Charlie Holderness, and I am one of our strategic account executives with Marsh & McLennan Agency. And so Marsh is a name that a lot of folks are familiar with. Marsh is the largest insurance brokerage in the world. And Marsh typically focuses on Fortune 100 companies. And so they created a subdivision called Marsh & McLennan Agency that really focuses on folks from concept or startup idea all the way to a couple thousand or, maybe even 10, 20,000 employees and a couple billion in revenue. And so where Marsh & McLennan Agency focuses on helping those people support what they're trying to achieve, helping them with risk management, insurance, policies, procedures, and stuff like that. And so I work in a space that really focuses on fun stuff. So whether that means NASCAR teams, trampoline parks, family entertainment centers, amusement centers, sportsplexes, any of the place where you'd really want to go and do something that's fun or have a little bit more higher risk than a traditional manufacturer or a retail store and stuff like that. And so I've been in the business about 17 years. I was an underwriter before I came onto the agency side. So I was the one that figured out if we want to insure something, if so, what price, what terms, what conditions, stuff like that. So it brought me a little bit of a different perspective to be able to figure out how we can structure it in a way that benefits the ultimate end user of the business owner.
That's very cool. So you're kind of from both sides in a sense. Instead of just one side, you're seeing both perspectives. So that's very, very cool. So before we get into all that sort of stuff, and I want to ask you about the NASCAR stuff, give us a quick little brief overview. How do you go and get insurance? Like, what is the process of a person saying, you know what, I want to get even car insurance, or I want to get insurance for my family entertainment center? How does that process go when they give you a call? Who are you talking to? Just give us an overview.
Yeah, it's a great question. So a lot of it depends on the state in which you live or the country, and then what the local jurisdictions are. So for most entities, if you're in the United States, I'm based in North Carolina, a lot of the initial conversations are going to be around, hey, I'm ready to sign a lease. And this is what the landlord is requiring me to carry if I want to operate my business here. And so the landlord's typically going to ask them to have general liability coverage, workers' compensation coverage to protect their employees if they're injured on the job. They may require you to have auto coverage if you have company vehicles, and they want you to have property insurance to protect the investment in the facility. Depending on your landlord's requirements, they could require different limits. And a lot of those limits could be dictated based off what you're doing, Are you serving alcohol? Do you have a facility or a cafe? Do you do regular retail? Are you having high risk equipment? Are you doing go-karts? Are you doing trampolines? Are you a full service industry? Are you training? All of the things that factor into your business are going to be contemplated when the underwriters and the carriers are looking at offering you coverage. Usually that conversation starts with, here's what my business is, or here's what I'm trying to accomplish. Here's where I want to do it. What do I need? And so the approach that we typically like to take is, here's what I would want to see if I was in the driver's seat. If I'm in that business owner's shoes, these are the coverages I want to be aware of. It may be that I want to table this coverage till next year, or I'm not worried about that, I'll pass. But it's our role to make you aware as the business owner of, this is what coverage is out there. These are what we're seeing other entities of your same size, scale, scope, and everything purchasing. And then this is what we want to know. And then you can decide as a business owner, hey, it's my first year, I'm just getting my feet wet. I want to get just the bare minimum I can get for now. Or, hey, I'm risk averse. I want to make sure I'm transferring as much of this exposure away to a carrier as possible and structure it the right way. But a lot of those conversations are going to stem around customer requirement, bank requirement, landlord requirements, and then just requirements by law. The state requires, and most states have a requirement of, depending on how many employees you have to have workers' compensation. Most of the banks are going to require you to carry property insurance if they're insuring the building or your upfit or your build out that you've done. And then most landlords are going to require general liability or an umbrella. And then if you have a car, you have to have car insurance, obviously. So those are going to be where the conversations start. And then we'll kind of structure the program based off what we would like to see and then scale it back as needed.
Very cool. So you guys are basically putting yourself in the driver's seat of the entrepreneur and say, okay, because I was told that, when you deal with insurance, you got to almost look at like an investor. You're not dealing with someone who's necessarily giving you capital to go spend it, but they are ultimately giving you a safety throw mat when it doesn't go well. So
they're giving the peace of mind. That's exactly right. And so it's very much a partner, not a policy. And so there are some forms where a lot of folks lately have said, well, I can go online and I can just get a quote online and here's what it is. And sometimes those can be very good avenues to secure coverage depending on what you're doing. But when the nature of high risk or potentially severe injuries can occur at your facility, if you have somebody that's doing something that breaks their neck and they're paralyzed, you don't want to have a moment of, oh my gosh, I hope I have the right insurance in force. I've invested my life savings into this career or this enterprise or this business. I hope this one incident that maybe was beyond my control or maybe wasn't, I hope it doesn't just uproot everything and ruin it. And so that's where making sure you have those conversations ahead of time is really important so that there are no surprises, right? It could be that you say, hey, that type of exposure, I'm not worried about. I'm comfortable self-insuring those. But most of the time for the more significant injuries, the bodily injury, the property damage, the injuries to other people, those are things that most businesses are going to transfer to a carrier to be able to provide the financial remediation should an injury occur.
Yeah, because then most people don't know how it actually works. So this is where if I'm having a throw mat being thrown for me, I want to make sure I know who's throwing that mat, make sure they're not going to miss, make sure I know quality that mat is, et cetera, et cetera. So it sounds like you guys are much more in that position, at least for the high risk stuff, maybe not basic car insurance and things like that, but for at least, family entertainment centers and high risk things, you really want to make sure you get good and understand exactly who you're partnering and what the rules really are. Most people, huge pages of all these contracts, right? So you got to make sure.
As you can imagine, the United States is a very litigious society. It's never my fault. It's always your fault, right? Even if it's my fault, it's your fault. And because of that, people can sue you for whatever they want. And so even if it's a completely frivolous lawsuit, you have to respond. You have to defend yourself. And so that's where making sure you've got a policy and really an insurance broker that understands the industry, understands the type of allegations, because people will get hurt. I mean, it's just like if you go to any soccer field in the country on a weekend, some kid is going to roll his ankle, break his leg, get hit with the ball, something will happen. Now, does that mean it's the field's fault? Does that, if he gets stung by a bee, he was playing soccer, is it the field's fault? Are they supposed to eliminate all the beats? You cannot eliminate all risk, but what you can do is find a partner and a risk management provider that understands what you're doing and will support you in your growth so that when those incidents happen, you're prepared, you're equipped to fight them, defend them when necessary, pay when necessary, and then make sure that you're set up for future success as well.
Yeah, it's really interesting. It definitely seems more like a partnership than anything else. And do you get annoyed sometimes when people are like, I hate insurance, and they tend to kind of look down on it a bit? Does that annoy you at all?
To me, it presents an opportunity because it's usually either a perception that they've had from something they've heard, an experience that they've had that hopefully we get a chance to correct. But I view it as, what we do can make a lot of difference. It can be the difference in someone's business going under. It can be the difference of a company going bankrupt or not, but it can also be the difference of protecting their employee and their investment. And so if you invest your life savings in building an extreme facility and then a tornado comes and rips it apart and gets it to the ground, without insurance, you're stuck, right? You got to do that. But being able to take somebody a check for $10 million and say, hey, it'll be okay. We're going to rebuild it. You're not going to be on the hook for anything other than your deductible. We planned for this, we prepared for it, and we're going to get you back to where you were. That's a good feeling. On the same time, I'll have clients that say, hey, I just opened my facility and I had 2 people get injured the first week. Am I doing something wrong? What's the plan? And I said, hey, no, incidents happen. If you have the expectation that you'll never have somebody get hurt in your facility, you're dreaming. People will get hurt, but that doesn't mean it has to ruin your business, cripple your program, or screw up things. Incidents happen. That's standard way. Incidents that happened that are handled the wrong way, that's when you have problems occur. And so to me, just because people might not like insurance, they might think it's a necessary evil or whatever it is, I view that as an opportunity to really change their mind and show where and how it can support your business. And usually it's in a more favorable way than they were expecting.
Yeah, no, I'm 100% with you. I am that kind of guy that used to be like, because all I'd hear was these traditional gymnastics coaches and people they complain about insurance and trampoline parks are destroying our industry and all this kind of nonsense. And even though when you look at the statistics, they're, pretty much the same. And I went and did a lot of research. We know a lot of people in insurance as well, obviously being in the sports that we are. And it's been a learning curve for me to really look at them as investors, as partners, as, a part of the team, not just a necessary evil, like you said. So I'm with you 100%. I like the way you spin that around and you use that as a positive thing. So then when you decide that, yes, I need a partner for let's stick with the FEC since that's kind of where everyone's going right now. What is a calculation that an underwriter is doing when they decide what the policy cost is or how much they're going to protect or anything like that?
It's a great question, and it varies a lot by carrier. Unlike a traditional dentist office or a grocery store where that industry has been around for forever. The FEC space, it changes every year. It changes with COVID. Traditionally trampoline parks were just trampolines. Now they're full on adventure centers with all sorts of other activities. It's very rare that you have a facility just has one thing to do. And so in the FEC space, as it's continuing to evolve, as are the carriers, as are the coverages, as are the forms and the limits and the claims. And so as more and more data becomes available for this industry, the carriers are changing their mindset. And so when I first started looking at these industries, 7, 8, 9, 10 years ago, it was a very calculated thing because they said, well, what are your sales? Well, then when you started pulling the covers back and you go, wait a minute, if you look at my total sales, if I charge $10 an hour or $20 an hour, are those 2 facilities that different in exposure just because one charges more? Well, probably not, or on this flip side, if you go on sale and you do a promo where, you do a Groupon or you do some sort of online promotion and you charge that person less, is that person's exposure different than somebody that pays full price? Probably not, right? So we started taking the approach of let's figure out a better way to capture an accurate portrayal of what your facility looks like. And so there are some carriers that purely use sales. There are others that base it off the average attendance, right? They say how many people are coming through. There's others that use a combination of both of those. And then there's some that say, I don't care any about that stuff. I just want to get to know you, your facility, what you're doing, how you're operating it, the safety policies and procedures, and then I'll figure out a number after that. And so from a property standpoint, that's pretty easy. It's the value of the building, the value of the upfit, the equipment, the improvements you've made, the potential income loss. Those are what they use. On the auto side, vehicles. How many vehicles do you have? Are you just driving your own personal vehicle on company use, or do you have business-owned vehicles you have to do? From a workers' compensation standpoint, those are going to look at the types of employees you have, the states in which they operate, as well as the payroll they receive. So it's a math formula for that. The biggest driver and where the meat is for most of these FECs is on the general liability and the umbrella coverage, because that's really where your true exposure is. Somebody gets hurt on your facility. Those policies, depending on the carrier, can vary widely in a rating basis. Some use sales, some use attendance, some use a combination. Some want to look at food receipts, some want to look at sock sales or arcade sales or restaurant. There's a bunch of different ways they can calculate it. And so because of that, you're not always comparing apples to apples. Sometimes it's apples to Volkswagens, right? Or apples to oranges. And so really having somebody that understands what questions to ask and the way to present them to the carrier makes a big difference. And so usually a park owner or an FEC facility manager is going to have to fill out an application that talks about these are the attractions we have in our facility. This is the ratio of court monitors or the ratio of staff to customers. These are all of the different revenue streams we have, and here's the breakout. So the more detail you can provide, the better. And I use a simple analogy. If you've got two candidates looking for a job, and one just says, hey, I graduated college or I graduated trade school, and the other one says, here's my resume, here's what I do, here's how I add value, here's references, here's transcripts, here's people that I've done, here's a video of me doing the proof. Which one of those people are you going to want to look at first, right? You're going to want to look at the one that gives you the most detail. So the more information you can provide, the better outcome you're going to have from a carrier and a broker standpoint, because they're equipped with the tools to better understand who you are. COVID changed that a little bit in that traditionally there would be risk control visits. The carrier might send a person out to inspect the facility, to look around and see, hey, it says they've got 10,000 square feet, but do they actually have 20? Or it says they have, this many type of attractions, but they actually have twice as many. Or it says they were in great shape and they're in terrible shape. There's cords everywhere. So that used to be the case. Well, when COVID happened and travel restrictions started coming out, the carriers are heavily relying on the applications to be their frontline, eyes and ears, their first line of defense. So the more transparent you can be with information, almost the excessive amounts of information, the better, because the carriers are realizing if you're being transparent with me and putting your best effort forward, I'm going to do the same in return and give you better in class pricing than I would otherwise give to somebody that doesn't take the time and energy to give me what I need to succeed.
Yeah, no, that makes a lot of sense. Again, it sounds like you're pitching investors, and it's the same sort of thing. The person who comes in tidy, looking really good with a haircut, and knows, okay, I've done this and this, and I've worked in this industry on these capacities before, and it takes the time to line it out. Of course, I'd just naturally believe them, even if I saw some things in there that I was like, oh, well, we could help you with this, and we could help you with that. I like that not innovation, that taking the time to really that's what you guys are looking for, the same sort of thing, where it's a lot more personable skills than people realize, maybe because they just think, oh, it's just a calculation and I just send what I have to and I pray that I get a good thing. But you're saying it's not like that.
We want to try and take the guesswork out. I mean, if you go to the doctor and you say my finger hurts, is that the only thing you tell the doctor? My finger hurts, right? You've said what you need, my finger hurts. But if you go through and say, this is when it hurts, this is how it hurts, this is where it hurts, this is what I'm experiencing, this is how long, you're going to get a better result. Same thing on the insurance side. The more effort you can put in on the front end is going to yield a much more positive experience on the back end. Because for a lot of these FECs, after rent and payroll, insurance is one of their most expensive line items. And so even if you can control a 5, a 10, or a 15% difference in price, it looks at the total cost of ownership. Because just because a price is cheaper on one policy, if it's not covering a key aspect of your business, then your total cost of owning that policy is going to be much higher if you have an uncovered claim. And so it's worth taking the time to do it properly on the front end and avoid surprises than get caught with a, oh my gosh, moment down the line when something happens and you find out you have a coverage issue or a gap that you weren't expecting. And maybe you shouldn't have saved a few $1,000s here. It's going to cost you a lot more.
Yeah, no, I totally understand. And it's sad because George Nissen, the guy who invented the trampoline in the 30s, he was taken out because he couldn't get insurance and he had to shut his doors and go into fitness. And that, it's a little bit sad. I wish he had, a bit more experience on this sort of side of it, because maybe, it could have been different for him. And that's the thing I think a lot of people don't think about. They just see the dollars coming out of their account today. They don't realize, what happens if, and that's definitely something to keep in mind for sure. And just going back a little bit, like you're talking about America being so litigious. I've seen some reports that show, it has it's a myth almost, but really only like 10 to 20% of these cases even get to anything of substantial value. Is there a bit of a myth going on, or is there a fundamental difference between, let's say, Europe or Australia, New Zealand, and the US? Is there a difference, or is this a myth?
I definitely think there is a difference. For whatever reason in the United States, no one, and I speak a little bit candidly, but most folks don't want to take accountability for their actions, right? If little Susie gets hurt, she does a backflip or she tries something, or even a grown-up tries to do something that they can't do, they don't want to own it. They want you to pay for it, right? And so typically what happens is somebody will do something out of their comfort zone, and maybe they get hurt, and maybe they think, gosh, I'm embarrassed or whatever it is. And ultimately, maybe they have to go to the doctor and they get some bills and they don't want to pay their medical deductible. And then maybe they're out of work and now they're going, gosh, I can't work, got these bills. I'm angry at myself for trying, but I wish it's got to be someone else's fault. So unfortunately, as you've seen from every lawyer commercial on TV, a lot of lawyers would take cases that are contingent. It says, you don't have to pay me unless we win. So when I'm sitting at home and I'm injured and I can't work and I have no income, and all of a sudden someone says, hey, well, we can go sue that FEC and you might get $1 million, right? And it'll cost you nothing. Well, some people, that's pretty appealing, right? And so they'll try, and the lawyers know that if I come and pound on your door and say, Greg, Charlie got hurt, shame on you, you were negligent in all of these other areas, but I'll give you the opportunity to settle right now for $20,000, right? Because if you don't, I'm going to sue you for $1 million. For some park owners, that's a petrifying experience. And they go, oh my gosh, I mean, if I have to pay out $1 million, what would I do? Would my carrier cancel me? Would I not be able to get coverage in the future? How do I handle that? And so for most FECs, they're going to sign waivers for their participations. They're going to have policies and procedures in place. They're going to do the things that a good, reasonable, prudent person should do. But you're still going to get that suit, and it will happen. Right? If you think you're immune, you aren't. You will get a matter of a suit at some point in your career. But responding to that becomes really important. And so what I tell folks is, do not get scared of a lawsuit. Right? Lawsuits are an uncomfortable situation, but they're normal. And so when those come in, making sure you have a team that's there to help you with your response. Just because someone gets hurt, it doesn't mean you can't be empathetic. It doesn't mean you can't show sympathy for them, but it doesn't mean you're responsible. And so making sure you have a carrier that understands we are not just going to roll over and cut that person a check because they're threatening them and trying to bully us into a corner, right? We will fight if we need to fight. We will pay if we need to pay. But what happens is a lot of these park owners and these facility owners, they get those letters, they get nervous, and they just choose to try and handle it on their own. And so they cut a check for $2,500, $5,000, hoping it'll go away. Well, what happens is that person gets that money, and then they go, you know what, I'm still not really feeling better. I want more, right? And then they come back and do it again. And because that initial settlement wasn't structured the right way, there's nothing to prevent them from filing another claim or even going after a full $1 million this time. And so having a risk management partner that can coach you, and that's when I go back to, it's not a policy, it's a partner, right? It's a partnership. It's an extension of your team. Making sure you have somebody that can help you and say, this is the way I would respond. This is what we need to do. This is who we need to engage, so that you don't set yourself up for failure in the future, but you nip a lot of those in the bud early, because an ounce of prevention is worth a pound of cure. And I've seen time and time again where a park owner or a facility owner has tried to handle it on their own. It's blown up in their face only to be compounded later on. And the carrier is going, gosh, if you would have just included me at the beginning, I could have handled this for you in no time. We could have fixed it and you wouldn't have been out of pocket anything. And the park owner is going, oh, well, no one told me that. I was just scared because this attorney's yelling at me saying I have to do it right now. And I didn't know what else to do. And so that's where having somebody that understands the space, understands the type of claims you might see and the way to properly respond to them becomes really, really important. And it can be the difference of a $5,000 or a $10,000 claim becoming $1 million claim or a multiple $1 million claim. So those are things to all factor in when you see those, because it is scary and it is uncomfortable, especially if it's your first one. But just knowing that that's the normal, that's what we deal with on a day-to-day basis. It's okay. We will get through it and it will be okay.
That's very interesting, and I really love this partnership idea because it sounds like it's extortion in a sense, and we've dealt with a lot of, traditional coaches, and not all, there's a lot of great traditional coaches, but there's a handful, on the extreme side that think FECs are here to destroy the universe and destroy their industry. And then they think that if they go and testify in court and be an expert witness, they make some money, obviously, which is really the factor here. And then they get to pump their chest and say, look, I'm being safe. Well, no, the injury already happened. So you actually are just causing more problems. And it sounds like even these expert witnesses are kind of doing the same thing that these sneaky people are doing, because they're taking advantage of a situation that ultimately they're not really positively influencing at all. They're not actually trying to get to the anti-risk sort of behaviors. They're just basically sponging off of a system that has a loophole, I guess. And I guess my question then becomes, well, is there a way around this? Is this just the way the Constitution is, and it's something that they put in way back in the, the preamble, and they just never saw this coming, and now people take advantage, and you can't really go against the Constitution? Or is there something else that's causing this? Is it fixable, really? It's a weird question. I know.
That is a very good question that is very difficult to answer. I will say that the expert witnesses are very important in certain cases. There are some expert witnesses who are not cheap, and so there are some people that ride the expert witness, circuit, and are just out there testifying and generating pretty substantial bills. The defense cost is included in most insurance policies, so that's not something the FEC owner has to incur. But they can be critical in a case, because if it's showing that, hey, our facility did everything right, they had the proper procedures and policies in force, they maintain their equipment, they've got documentation for the inspections, this is what a reasonable and prudent person would do. So there's nothing above and beyond an additional that could have been done to prevent that injury. Sometimes people just get hurt. That's why it's an extreme sport. That's why not everyone does it. We have facilities that have skating rinks, and they're like, we have people that fall on the ice every minute, right? Yet they're not suing every single second because the ice is cold and hard. But yet you go to the same facility 2 blocks over that as a trampoline park where somebody's getting hurt on a trampoline. What's the difference, right? Is it perception? Is it, well, trampolines are meant to be safer? Or is it it's just a newer industry or a different mindset that people have that, well, I know soccer's dangerous and I can get hurt, but that's not the same. But trampolines are more dangerous and they should have more. And so, you get concussions on ice, you get all sorts of stuff where people fall. And if you look at the claims history and the premiums, it's substantially cheaper. And I think part of that mindset goes back to 10, 20 years ago, the industry as it is today didn't exist. And so now you're talking to carriers that are trying to create forms and create policies to ensure something that wasn't around when maybe they were born. And so are you just going to be a guinea pig and try and figure it out? As the actuarial data becomes available and the analytics help support those decisions, every additional year you've got more credible data, where 10 years ago, it's just throw a number out, and if it sticks, it sticks. And if we make money, it's a gamble. It's a roll of the dice. And so now, thankfully, as these are becoming much more mainstream, kids are interested in it, parents are interested in it, people have been cooped up for the last 12 months. They want to get out, they want activity. The demand is there. And so it's just a matter of finding the carriers that can find the right balance of, yes, it's risky, but that doesn't mean it's necessarily super high risk, but let's understand it. Let's structure it. Let's do what we can to prevent it. And then hopefully the outcomes will be the same, because you're always going to have the professional claimants that try to milk the system and take it for everything it's worth. You'll also have the person that just genuinely gets hurt because somebody at your park did something wrong. And so some people go back to it's a necessary evil. Insurance is designed to support your business, right? It's not meant to cripple your bank account. It's not meant to do anything. People hate insurance until they need it. And then they're really, really glad they have it, because it's the difference of going under or not. And so, if folks think it's just to buy the policy and forget about it, there's a place for those type of owners, and that's not really where we feel like we can be a good complement for them. What we're really trying to do is say, if somebody needs a partner, you got enough on your plate to try and run a business. Insurance is something that's changing every day. Markets are changing, capacity is changing, rates are changing. You need somebody that knows that space backwards and forwards, that can equip you with the tools you need to successfully run your business, defend the claims when they come through, and be able to perpetuate your business years and years down the road, as opposed to oh my gosh, we had a claim, now we can't get insurance, it's too expensive. Or what, we didn't expect that, now we had an uninsured loss and now we're in trouble. Making sure you have the foresight to do that becomes really critical. And so I don't know that there's a fix or that lawsuits are going away. If you look at the number of people enrolled in law school, the commercial on TV, it's not going anywhere. So just making sure you're prepared to be able to battle that, fight that battle is really the only thing you can do at this moment.
Okay, well, we'll have to see how it develops, because it sounds like just getting more statistics and more data really is the only thing you can do at this point. Because it's only 2004 when Jeff opened up Sky Zone, and then kind of all boomed there. That's not exactly a lot of data, considering even data that we've been doing for medical research. Still, it takes 15 years just to even get one study. Never mind, so that there's one study was done for the whole, that time period. And I think a lot of people forget that, because I think people tend to be very locally focused. Like they're thinking, what's happening today? Well, how am I spending on my insurance today? Am I having an injury today? No, today is fine, so therefore I shouldn't worry about it. It's all this short-term thinking I think humans are trapped in many ways that really, you know, they got to take the long term. Like think about the Challenger with NASA. Well, NASA's still going and they're trying to go farther and farther. And they're, you know, so obviously there's some issues with that, but it's not going anywhere. So why would you then project some difference to the FEC market when it doesn't even really make sense if you stopped and took the long-term view? So
well, a lot of people to that point have never experienced a sensational claim, right? They maybe have backed their car into, you know, a parking lot light post or something like that, or maybe they've had a burglary at their house. But most people have never experienced a demand where somebody has died. You've had a fatality, or you've had a paralysis, or you've had a significant injury at their facility. Most people have never experienced that level of a claim. And so in their eyes, hey, I haven't had losses. This insurance is so expensive, right? They've never been on the other end of a business owner that has had $1 million claim or a $5.5 million claim. So they've never seen, hey, that premium that I paid just saved me $5.5 million, right? Because in the absence of that insurance, that money would have come from somewhere. So most people have this perception of, well, I haven't had any claims, but my premium's still high. Well, on the contrary, right? If you had claims, would you want your premium to be even higher, right? They only want to argue one side of the argument. And so that's why what's really important is to educate yourself on understanding what the coverage is, what the carrier is actually providing for that premium, so that you understand the partnership, that it's not just a one-way street. It's not just I'm taking this money to sunk cost somewhere else. There is value you get from that premium you pay for. Now, just because you don't utilize it in the true sense of you don't have a claims paid doesn't mean you didn't gain value, right? You put your head on the pillow at nighttime, you were able to sleep, and you had that confidence knowing if a suit came through, you weren't going to be ruined, right? There is value in that. Now, can you quantify it? Maybe, maybe not. But it's something that you want to make sure you're educated to understand, that it's not just a one-way street. And if you start treating carriers like that and burning bridges that way, it's going to make you a less than desirable candidate should you need them in the future. I don't want to burn those bridges. I want partners, right, that can help me as I continue to grow and evolve my business.
I love it. No, it totally makes a lot of sense. So when you do have a high risk situation, whether it's NASA or whether it's an FEC or Freestyle Trampoline, you know, on garden trampolines, where do you go if you were going to work with Lloyds of London? High risk marketplace. Can you walk us through how Lloyds works a little bit?
Sure. So the short answer is individual park owners cannot go to Lloyds. Lloyds as a syndicate is designed to work with brokers around the country. So Lloyds essentially, you know, underwriters, that term came from old shipments across the thing, and they would literally write their name under the line. They were underwriting their name to say, I'll gamble on that risk. And so Lloyds is a market design where traditional insurance like Travelers or Hartford or some of the household names that sponsor golf tournaments that people are aware of, most of those carriers don't like really high risk stuff. They don't like newer enterprises or exposures outside their comfort zone because the data and analytics aren't there to support it yet. And so because of that, when people need to get coverage for their facility, in most cases, they have to utilize a broker like a Marsh. You know, there's a lot of other brokers out there. Some are local regional facilities that are one-man shops. Some are, you know, large organizations that have 80,000 plus people across the world, right? So they're going to reach out to their local insurance person or maybe a more sophisticated broker, and they're going to say, this is what my business does. This is the coverage I need. Walk me through it. Some of those brokers are going to have direct access to Lloyds and those type of carriers. Other ones are going to have to use a middleman or even multiple middlemen to get to those programs. But those programs with Lloyds are basically designed to say, figure out what you want to do, find a carrier or a group of carriers or a syndicate of carriers that's willing to insure it and what price, and then offer it to the marketplace. And so Lloyds and the carriers around Lloyds are designed to be a place where you can go get insurance for whatever you want. Now, everybody always asks, hey, like, hey, can you get insurance on anything? Or is there anything you can't get insurance for? You can get insurance for anything. It's just a matter of, are you willing to pay the price for it, right? Because it's essentially a gamble. Insurance is a giant gamble. It's somebody is saying, I will take on this amount of premium in hopes that I have enough premium or enough people paying me the same premium to be able to pay out claims should they come, right? So someone says, well, you can't get insurance. That's not necessarily true, because if you said, I need insurance for my family entertainment center and I need it to be reasonable, a reasonable number to you, let's just say it's $20,000 a year, right? Well, if you say I can't get insurance, I could go to a carrier and say, would you offer insurance for $30 million in premium a year? That carrier is going to say, absolutely. If I can get $30 million, I'll give them coverage. So you can get coverage, but can you afford it? Is it sustainable? Is it realistic? Probably not. So then it's a matter of, well, where can we start this negotiation, right? What are you comfortable with? What are your concerns? What are the challenges there? And so the Lloyds underwriting group is literally there I mean, it almost looks like a stockbroker where everybody's saying, I'll do this, I'll do that. I want a piece of this. I don't know do the whole thing, but I'll provide $250,000 of the coverage, $500,000, all million, 10 million, whatever it is. And so Lloyd's is a place that provides coverage for coverage that needs to be in a more specialized or a higher risk type environment. Sometimes Lloyd's provides the excess coverage. Sometimes it provides the primary coverage. It can be an area that fits in a lot of different channels. And so it's not always who we use for the FEC space. Lloyd's does have some carriers that can compete very favorably, but they're not the only person. Sometimes there's other carriers that utilize reinsurance. And what reinsurance is basically insurance on insurance, right? It's a carrier saying, if I have a $10 million exposure with this FEC, maybe I want to buy insurance if I have a claim that goes over $2 million. So I'm hedging my bets, right? That insurance carrier is buying insurance on their book of business. So if they have a giant hurricane that does millions and millions of dollars in property damage, they're essentially have an insurance policy that's going to pay out and minimize their losses. And so same thing happens on a smaller scale with homeowners insurance. Most of those carriers are buying reinsurance on all their stuff. And so sometimes park owners will hear the objection of, hey, this carrier cannot provide coverage for me because it's a reinsurance treaty violation. What that means is that carrier is not allowed to offer coverage for certain things because it would violate their reinsurance needs. They won't get coverage for that if something happens. So that's what limits the marketplace sometimes, is certain carriers may say, hey, I love everything that you do, but my reinsurance doesn't, and therefore I can't provide coverage for you. So Lloyd's is typically accessed through your local brokerage team or a middleman that they utilize. And it can be a very, very helpful sales channel for us to get coverage if we're having trouble with the more standardized markets.
That's a great overview. It sounds to me like almost like a stock exchange. It's like a TSX and NASDAQ where you bring in investors, insurance investors, I guess, and they come and make little groups and say, hey, I need $10 million for this new company. You want to put in two, you put in a few, and then boom, 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 then you got it. But they're just doing it on the bears, not the bulls. So it's, again, that same sort of things. I've seen the videos where they're just yelling at each other, just like a stock floor, and so that is kind of what's going on. It's not really much different. It's just for the downside, not the upside. Is that fair?
Well, it's the same thing when you hear people saying like, hey, we're going to insure Tom Brady's arm or Jennifer Lopez's butt or whatever it is, like those things that are important to their career, right? Well, you can't just call up your local insurance agency down the street and say, hey, I want to insure Tom Brady's arm. I'm the quarterback and I need insurance in case I ruin my moneymaker, right? Well, there are people at Lloyd's that say, hey, that's a gamble we're willing to take, but we're going to charge you for it. There's a premium that every carrier would be comfortable with for that risk. And that's where Lloyd's is a little bit more creative and doesn't have to follow the standard rules. It's kind of a write your own way kind of place. And so that's what it's designed for. But I mean, to that point, Lloyd's does insure family entertainment centers. And sometimes they're a necessary carrier that we utilize depending on the exposures, the venue, and all of that as well. Yep.
Yeah, very, very cool. So jumping now to more traditional side, for traditional sports, how do you get an insurance? Let's say if you were the USA Gymnastics Federation or Canadian Gymnastics Federation or equestrian or any kind of these sports federations, well, how do you go about that? Are there different options? Is it just a one ticket and one person, or how does that work?
It's a great question. There's a lot of different options, and so there's multiple ways to design a risk management program in a franchisee model, a parent organization and subsidiaries, or a local organization. So, and it's hard to answer on this is how it always works. So like as an example, a lot of times there's governing bodies, but they utilize local facilities. So the local facility will maintain its own coverage on its premises, but there'll be a sanctioning body, right? That's here are the rules, here we're coordinating, we're supplying people, rules, whatever it might be. So in some situations, it's the local facility provides all the coverage. Some situations, it's the local facility provides some, the governing body provides some supplemental or some additional coverage. And then there's some where it says the governing body is handling all of it. And so it just depends on the organization, how it's structured and how it works. But there's usually a complement that says local facilities providing the premises and the operations and the property and the comfort of employees. And then the sanctioning body maybe provides a supplemental program or like an accident component or something like that. That's pretty common. But a lot of it comes down to finding out what the contract says, what the governing body provides, and having those conversations ahead of time to avoid any surprises down the road.
Yeah, yeah, okay. And what about coaches? As part of Gymnastics Canada, or former part of Gymnastics Canada, as a coach, I took my levels and I paid like 40, $50 a year, whatever it was, for insurance. Is that done? Is that a different sort of thing, or is that another just a risk profile that's just covered for X amount and it just covers all the coaches that go through the policy? Is that pretty standard?
That's usually one of the master programs that governing body would enforce, where they'll say, hey, when you are acting within the scope of a coach for this organization, we're going to extend our coverage to you. They may charge you a little bit for it. It may be part of your membership dues or whatever it is, but usually that's a master program saying, when you are operating in the scope of your tenure, your responsibilities, and in this entity, the coverage that we have is going to extend out for you. It's kind of like a master program. Those are very common for large sanctioning bodies or governing bodies, because it's part of the value they bring to their members of, hey, if you join here, right, we're going to provide you X, Y, and Z. And here's the cost, or there's the cost is included. And that way you've got some coverage as you go out into the world and provide these services on our behalf. We're getting coverage for you and then us for the governing body. Yeah, very common.
So it's a benefit. It's not necessarily a money grab. It's more because you're thinking, well, if I'm a coach and I get, up to $1 million or whatever the policy is, theoretically, you could almost look at that governing body as giving $1 million to all their coaches in a worst case scenario, not grabbing $50 a year because they're greedy. No, they're giving you actually
group purchasing, because if you had to go buy that on your own, that same level of coverage might be $300 or $1,000 or whatever it was. And so they're saying, hey, our size and scale allows us to leverage those relationships and say, we're going to bring you a whole bunch of people and purchase it all at once and obviously hedge our bets. We're diversifying. And so therefore they're able to bring it at a much more affordable cost and then pass those savings on to their members. That's the whole premises of the group purchasing power.
Yep, makes a lot of sense. And then how does that relate to franchisors? People like Jeff at Sky Zone and Altitude and all these guys that now own all these different locations. Is it a similar sort of like a governing body sort of policy, or is it something different?
Typically on those program structures, there's going to be a master program for the corporate parent, because a lot of times those corporate programs might have their own facility. They might own one or two or three. There might be purely franchise operators across the country. Usually those franchise operators are going to cover the exposures for their parks. They're going to cover their property, their liability. They're going to cover their workers' compensation, their auto, all of that. But they're going to name the franchisor as an additional insurer of being protected under that policy, because the franchisor is giving them guidance, is giving them policies, procedures, tools of the trade, that kind of thing. So any good attorney is going to sue both the individual operator at the franchisee level and name the franchisor for their management oversight. And so the franchisor is saying, hey, Greg, if you do something wrong, you got to protect me under your policy, because it's not always my fault, right? One of your employees could go rogue and do something and then I get brought into a suit. So the franchisor is going to want to be protected on the franchisee level. Just like on the flip side, if the franchisee gets named on something on the corporate parent side, they want to make sure that you're scratching my back, I'm scratching yours, kind of thing. So usually you see coverage at the local level extending upstream. And then there's also some upstream coverages that extend downstream as well.
Yeah, makes sense. Protect everyone, because again, your franchisees are your investors as well. They're the ones dropping a couple.
Your frontline. Yeah. Most of the time, the general public doesn't understand the difference, right? They say, hey, I go to Sky Zone, I go to Altitude, I go to Urban Air, I go wherever. I came there. I don't care who's behind the scenes. I want you to pay for it. I don't care where it comes from. Just make me whole. And so that's why having the policy structured the right way on the front end makes that process a lot easier.
Makes a lot of sense. And so then let's think about, COVID. I looked at your guys' report. You have a new COVID report now that's going to change things. Can you give me a quick little overview of where you think this is going to go? I know it's a little bit early, and obviously the world hasn't necessarily, I think what you guys said, that the feet on the ground weren't necessarily as cohesive as the theories of how to deal with this. And now that we realize that we're not great with dealing pandemics, it's changing the landscape for insurance moving forward. Do you have any thoughts about that? Where do you think it's going to go? Is it going to be a drastic difference and everyone should just hang on, or is this going to take 10 years to get into effect? Or what's your thoughts?
Yeah, it's a great question. So, I mean, the biggest challenge with COVID, people battled saying, hey, my business was shut down because of government restrictions and therefore I lost income and I want my property insurance company to pay for it. Well, pandemics and viruses and stuff like that are traditionally excluded from most property policies from a business income or a loss of revenue standpoint. There has to be physical damage to the property to be able to create a business income loss. And so that was what a lot of these lawsuits and a lot of these people are mad about, is they're saying the government shut me down, therefore I was closed, therefore I didn't make money, I need the insurance policy to pay for it. And insurance as a whole is not designed to just be a catch-all and insure-all policy. Otherwise, it would never make any money. And so if you think about a pandemic, unlike a hurricane, right? If you have a hurricane in South Carolina that impacts all that property, California is still okay. Kansas, Colorado, Texas is still okay. If you have a pandemic that affects every business in the entire country all at the same time, any insurance carrier that had a product or could have created a product like that would immediately be bankrupt, right? Because there's not diversification like there is with hurricanes and property and liability. And so there is no product available that's feasibly financially, there's not something that somebody can afford that would say, I'll cover you for anything and everything, right? You can get coverage for almost everything at a price, but most insurers would laugh at you if you said, hey, I'll give you pandemic coverage, but it's gonna be $600,000, $200,000. They go, no thanks, right? Because nobody had ever thought about something like this happening on a grand scale. And so when we're talking about how COVID has changed our business, most carriers already had virus and bacteria exclusions on the policy. So they're not changing that because they're not giving coverage for something they didn't give it already. What is changing though is how the coverages respond to sales-based, revenue-based things. Because if you told me you were going to do $1 million of revenue at your FEC last year, right, you probably came nowhere close because your park was closed or was shut down for a certain amount of time. And then you're trying to basically revamp and people are not necessarily coming back. You just flip the switch and everything's back to normal. Now, fortunately, what we're hearing is, hey, parks are open, demand is there, they're doing great, they're back above where they were in 2019, and the demand is pent up and it's coming to fruition. But what happens was last year, when you have sales-based policies, some of those policies, at the end of the year, the carrier says, hey, you told me you were going to do $1 million in sales. You actually did 1.2. So you owe me additional premium on that extra $200,000 in sales that we didn't think about. However, a lot of those policies do not audit down. Meaning if you told them you were going to do $1 million and you only did 600,000, the carrier says, hey, sorry you missed, I'm keeping all your money. And so a lot of park owners don't understand this. And they go, hey, wait, we just finished our policy year. We didn't come anywhere close to our sales estimate, but my carrier's not giving me any money back. What's going on, right? They didn't understand how it worked. And so you had this mindset of people that this is what I think is going to happen. You had agencies and agents that didn't understand it either. And then all of a sudden you have a surprise. And surprises in our industry are not good, right? You want people to know what they're getting and what they're spending dollars on. And so I can't tell you how many calls I had where someone said, my agent told me this. I thought this is how it was going to work. That's not the case. What do we do? Because I just got hit with a bill or I was expecting premium back that now I'm not getting. I'm unhappy. And so with COVID, it really changed the mindset of a lot of those carriers because every carrier is in the same boat as the underwriters, right? As the same boat as the insureds. Everybody's in this together in theory, right? Well, if you're a carrier and you've got all that money, but the park was closed half the year, the exposure is not the same, right? So finding a carrier that's willing to make compromises and concessions and say, hey, Greg, we understand your facility was closed 6 months. Let's figure out a happy medium, or whether that's a return premium, an endorsement for a coverage change, an extension of your term, some sort of compromise that adds value for you is a fair reflection of the change in exposures, while all at the same time making sure the business is sustainable. Because if I just price gouge you from a carrier standpoint and I don't give you any accommodations and you go under, well, who won in that situation, right? The carrier no longer collects premium going forward. They're missing out. You're no longer a business. You're missing out. Everybody loses. But if you can get everybody on the same page like a partnership and say, look, we need help, right? We need to be able to sustain this. The longer I'm in business, the better the carrier is going to make out, the better I'm going to make out. We're all in this together. Let's try and figure out a way to be successful together. And that's where we were able to find some creative solutions to say, here's how we're going to do it for 2020. But let's go ahead and build those into our program designs for 2021. So there is no surprise. We know the expectations and can do that going forward.
That is very good. You know, I know people don't like to say good things about bad times, but I'm always the kind of guy that says, well, what are we learning from it? And it sounds like, you know, what a system that maybe people didn't really quite understand very well. And it sounds like they definitely don't understand it. It sounds like they're being forced in a way to now under mass pressure because of this big sort of surprise to actually change the way they actually deal with their policyholders and all that sort of stuff. So I think it actually is a good thing. It's almost like the kick in the butt the insurance kind of industry sort of needed to be able to kind of see it from their perspective a little bit more and realize, okay, yeah, if I'm not auditing down, then well, where is that extra money coming from, and where is the new risk portfolio when now I have no one in the park unless I'm the one doing quad flips by myself, you know what I mean? So I think it's going to force them to, like what you're saying, is to really change and adapt, I think, for the better. I think for providing the customers, which are the FEC holders, a better solution over the long term.
Well, not only that, but you also had FEC owners and park owners that had the time to be able to actually review their policies and understand what they were buying. And so in the past, when business is going a million miles an hour, there were very few times where somebody said, hang on, let me just take a minute to myself and go read my insurance policy. It did not happen, right? They were relying on their broker or their agent to be able to be their eyes and ears for them. And unfortunately, during that time, the people realized what they were getting for what they paid for maybe wasn't what they thought, or maybe the grass was greener on the other side. Because they had the time to dive into all of the key expenditures, including insurance, they then had the opportunity to make changes and to pull the covers back and say, okay, what am I buying? What am I getting for this? Who's selling it to me? Or do we have the right carrier but the wrong agent? Or do we have the wrong agent but the right, there's a bunch of different decisions that go into it. And fortunately for us, 2020 was a year of reflection, and a time when we were able to say, we've been telling you this, that you need to take a chance to read into your policy. More park owners were able to do it and then identify problems or areas where they could make improvements, and they had the time to see them to come to fruition.
That's a good point. Yeah, we've, for our businesses, completely gone horizontal and changed because we're not doing live events anymore, or at least definitely not as many. And it's forced us to rethink everything, and that's now allowing us to scale, as we were discussing before. And this is actually a really good thing. And I think that's it's almost like there has to be, it's funny because we're going through our contracts too and thinking, when we have an event owner or event host and they don't really read the contracts, they do it for us too, and then all of a sudden they try to leave us, well, blah blah blah. I'm like, well, hold on, you didn't read the contract, you didn't. So we are now updating our contracts, same thing, with more signatures here, you're gonna have to sign every single line, you know what I mean? So I can totally understand that, and I still think that's good. It sucks that it has to come to this for people to read these policies, but that's, I guess, the human condition at some level. So we got to just kind of roll with it. But do you think that then this whole, revenue-based sort of policy determinant, is that going to kind of fade with time now? Because like you said, it doesn't really necessarily affect the actual risk profile, or is there a reason that they start there? I don't understand.
It's the easiest figure to capture. So I don't think it'll go away. It's everybody tracks revenue. And so because of that, it's a very consistent figure to utilize that most carriers can say $1 million is $1 million, $2 million is $2 million, right? But when you pull the cover back, look at gas prices, right? If you're an entity that sells gas, last year when gas was $2 a gallon, now it's $3. Are your sales up 50% just because the price of your commodity changed, right? Did your exposure really change? Or would it be better to track it based off gallons sold, right? And so there's different ways to get to the same place. And so I do not see the revenue figure being eliminated altogether, because it still matters. But I do think you'll see carriers and agents asking you for more detail to substantiate that figure. Where does that revenue figure come from? Is it a bunch of money coming from vending machines? Is it a bunch of money coming from sock sales? Is it a bunch of money coming from birthday parties, or hourly rentals, or private sessions? Because all of those things are different. And so that's why I think the shift will be in where and how that program gets structured, as opposed to just tell me your sales and here's your premium, because it's not a true reflection of what they do. And that's where we've tried to be really intentional when we position our park owners and our insurers to say, we want to think outside the box and think a different way. It's not that the way you're doing it is wrong, but we think we can improve it or make it better. And that's what we want to try to strive to do.
Yeah, sounds like it. All right, well then, for a final question, let's end it off with a big one. If I'm opening up an FEC park, you know what's coming. What should my range be if I have a 20,000 square foot location and 100,000 people coming through, paying their $20 an hour on average, high low? Where should I be expecting to see these premiums come in? Is it, I've heard everyone say it's got to be about 100,000, but obviously there's definitely a range here. What would you say for someone who is watching this and is about to be ready to pay for it? What should they be looking for so they're not getting duped by, people?
It's a great question. Probably the question we get asked the most. And what I will tell people is, it's not always the same because every policy is different. And so there are policies out there that can be as cheap as $25,000, right? But they're cheap for a reason. And there's a reason why their premium is so much less than the alternatives, because they lack a lot of really key important coverages. So when I talk about a claims-made policy versus an occurrence-based policy, everybody's probably familiar with life insurance. There's term life insurance and whole life insurance, right? So if I get a term life insurance that says it's only covering me if I die today, that policy is pretty cheap, right? Because the likelihood of me dying today is hopefully very small, right? Now, if I get a policy that covers me the rest of my life, that's better coverage because I will die at some point, but it's probably more expensive, right? But if you just said, hey, here's 2 life insurance quotes, technically those are both life insurance quotes, right? It might be $1 to insure me for $1 million if I die today, but it might be $100,000 to insure me the rest of my life, right? And so park owners, you don't need to focus on just the price. You need to focus on the total cost, because what I'd say is, if you're just asking for a range of price, you know what people will say, I can get you a quote for $25,000, but they don't know what they don't know. And if that doesn't cover your main exposure, or it sets you up for potential future failure, well, that coverage is worthless. It's no good. Versus if I tell you, hey, the Cadillac version of the program is going to cost you $80,000. Well, you may go, but Bob over here is saying it's 25. Why are you 80? It's the same limit. Well, what's it truly covering? And so I would say for a robust program, for a coverage that I would want at my park, right? If I was an investor and I was doing it, an occurrence-based form for general liability, a lot of it depends on a bunch of factors. What's in your park? Is it a bunch of attractions? Is it just one? There's a lot of variations, but an average park, the premium is going to be for liability anywhere from probably 50 to 1,000-ish or so up to 100,000, depending on what you do for general liability alone. Now, there's a lot of factors that tweak that: the state in which you operate, the venue, your safety policies and procedures, the size of your park. I mean, because there's some smaller parks that are going to be way lower than that. There's some bigger parks that might be way higher than that. But like some carriers have minimum premiums where they say we have to charge 70 or 80,000 per location regardless. Other carriers don't have that. So usually the $50,000 to $100,000 range on general liability is pretty accurate. The umbrella pricing on top of that is going to be based off your underlying general liability. So if your landlord requires you to have a $5 million umbrella, that might be 40 or 50,000 bucks. For some folks, that might be 10. It just depends on what you're doing. And so the hard part is it's very difficult to give just a blanket statement as to what premiums cost, because there's a lot of factors that go into it, right? You may do a lot of revenue, but if you're in a market like New York where an hourly rate is double what it is in Georgia, your coverage might not be that different, right? And so some venues require premiums to be much more expensive because they're very pro-guest, right? They're going to realize if somebody sues you, California is a terrible venue. Rates in California are extremely expensive because, as you know, California just kind of does its own thing. Florida is very challenging. Louisiana is very challenging. New York is challenging. But some of these other states are very favorable. So you might go out west or down the southeast and have a state that's way more favorable from a jurisdiction standpoint. They have a lot more success fighting some of those claims of just somebody got hurt. So the carriers factor in all of that. And so we'll get a call from a park owner in Wyoming that says, hey, I was just talking to a buddy that has a park in Georgia and his premium's more than mine or less than mine. What's going on? And it's not always apples to apples comparisons. So I would say if I'm a park owner, I would focus more on your total cost of risk. What am I buying? What does my premium go towards? How long is that coverage in force? Is it for a set term, like a claims made policy, or is it based off the life of the claim or the life of the incident? And because all of those things can make a significant difference in price. Deductibles make a significant difference in price, and really get a good understanding of what your agent is positioning to them. And I tell everybody, I'm like, look, I understand a lot of people have personal relationships. Their brother's an insurance agent, their dad, their cousin, and they want to work with those people. And that's fine. But make sure you ask them questions about what happens if my sales come in under? Is my policy auditable up or down? Where in the policy language does it say that? Explain to me how this works if we have a claim. Are we responsible for paying the claim and then we reimburse from the carrier, or is the carrier defend on our behalf? Because within a few questions of asking your agent, you'll be able to tell if they understand the space. Ask them how they would respond if you get a lawyer threat letter, right? Because all of those things will let you have a better understanding to know, does that agent understand this industry? And if he stumbles on those basic questions, you probably need to be looking for a different broker that focuses in this space that can guide you and coach you. because just like if you go to the hospital and you ask the doctor what's wrong and he goes, never heard of that before, you're not going to feel very good, right? Or he's going to go, I don't know what to do. Maybe I can go Google it, right? Well, you can do that yourself. You want somebody that says, this is how I'd respond. This is what I would do. These are the parties I would involve. This is what I would retain. This is what I would set yourself. That's the confidence that you need. And in an FEC space and trampolines and attractions, people will get hurt. So make sure you're prepared on the front end with the right team, the right agency partner, the right carrier partner to make sure that you're going to have that good sleep at night when you've got that claim coming and you go, hey, I've got the coverage I need. I'm well positioned and I'm ready to go to bat.
That's a very good point, because you were talking about the partnership of, pitching to the investors, but really that they also should be kind of pitching you a little bit, and you should be smart enough to be thinking, am I really getting the person that knows what's happening here? Have they dealt with this before? Are they just trying to get my money and they think they're taking me for a loop? And there's lots of people like that. So should be, I think, like you're saying, it's a two-way street here. Make sure you test them a little bit and ask them some doozies to make sure they know what's going on.
Because most people that are starting FECs, they got their money from somewhere, right? They were either successful in business before and they want to do this. They have investors that they're representing. And so because of that, they may have been successful in a business completely different. And so they may just by nature go to the broker that helped them with their previous business. And an FEC is not the same as a retail store. It's not the same as a manufacturer. It's not the same as a distributor. And so the person that helped you with property insurance may just say, well, sure, I can do it, and I'll get you a quote, and here's your quote, right? But they might not understand the intricate details of your operation and how it's going to work, because you will have claims, you will have incidents, and they need to be prepared and have the staff and the support system to help you through that process. And very quickly, you can identify who's the right partner, because it should very much be an interview. You don't need to just say, I worked with Bill before, I want to work with him again. You need to ask him, Bill, how do you handle this? How many clients do you work with in this space? What's your claims policy? Who's going to support me? You need to be interviewing them, because if you're about to give them tens of thousands of dollars, I want to know what I'm getting for that premium, right? Not just on the carrier side, but on the agency side as well.
I agree 100%. I really like the way you're looking at it as this partnership, and both people having to come in and, demonstrate their resumes equally, making sure they both know what's going on, where a lot of people just kind of, it's kind of like, oh, it's old news. Get someone else to do it. The broker will handle it. I'm one of the guys, I have to have my hands in everything because I don't really trust all that sort of stuff. So I kind of like what you're saying. And I'm with you 100% that, it just takes one little thing. It takes even a typo, a misreading of anything, even on the insurer's side. And all of a sudden they don't qualify for their reinsurance. And now you just have this huge domino effect, and now everyone's screwed, So I like the way you're approaching it. And I really love this conversation. I'm already kind of thinking about it differently. So I really like that, because even though we're live right now, I'm always kind of trying to figure out how these things work. And I feel like I'm learning as I'm going, which is great, because I know our audience definitely would love to hear all this sort of stuff. So I really appreciate you taking the time. Do you have any final words of advice or anything like that?
I would tell everybody, insurance contracts are terms and conditions. You're not buying really a tangible product, you're buying a contract. And those terms and conditions are the only things that matter. And they don't matter until they matter. But when they matter, they are the only things that matter. And so what I would tell you is, regardless of what your agent tells you, read your policy. Look at your policy, because when you have a claim, it doesn't matter if your agent said one thing, it is the policy terms and conditions that will respond. And so I've seen situation after situation where somebody says, but my agent said this was covered, or I was covered. And the response is, that doesn't matter. It's based off your carrier. Now, there may be grounds that you go back to your agent and are able to sue them for recourse for, professional exposures or negligence there, but read your policy, understand what you are buying, ask questions, right? I mean, people always say, when you go to the doctor, people are afraid to ask questions and tell what's going on. That just shouldn't be the case. It needs to be an open conversation, because you will get better results when you have full transparency of, this is what I want to do. Help me find out the right carrier, the right agency, the right broker to support what I'm trying to do. Because a properly structured insurance policy shouldn't restrict what you should do. It should support your growth. And when you have incidents, it shouldn't just immediately mean, oh, I had a claim, now I'm canceled, right? I mean, that's why you're buying insurance in the first place. So find a broker that understands your industry, interview them, ask questions, and then find somebody that you feel the most comfortable to get you to where you need to be.
I love it. That's amazing. Yeah, I totally agree with you. And I'm hoping that our audience can understand that it's a two-way street and we have to work together as a partnership. So I thank you very much, Charlie, for jumping on this and just helping us, get our whole people hopefully on track as we kind of come out of COVID, and maybe they'll look at their policy one more time based on this. And then hopefully they'll be a little bit safer in the future. So I thank you very much. And we'll get you on another time if there's any. I got some other tricky questions for you once we're a little bit farther down the line here. I got some stuff that might throw you for a doozy, but we'll wait till next time.
Sounds good. Thanks, man.
Thank you. Well, I hope you guys enjoyed and learned a few things. There's a big world out there worth exploring, and I'm happy to be able to bring these great experiences right to you through this podcast. If you enjoyed this podcast and learned something, please share and take a screen grab of our funky cartoons and hashtag GRT certified for a chance to win a shout out to our community. Also, please leave us a review to be part of helping this information get out into the industry. It's much appreciated. Along with these podcasts, we have a large online content hub that we call the GRT Network, with many other interviews and full tutorials and written content discussing everything about acrobatics. We will be constantly growing this archive of videos like a cross between Netflix and Wikipedia for anyone in the acrobatic industry. We also have a complete online educational program for athletes of all levels that provides a do-it-yourself pathway to success for any acrobat. Check out our constantly growing library of playlists that will teach you anything from tightening up your social media, to how to get around fear, to even learning all the biology that underlies all your acrobatic skills. We work very hard with our team around the world to provide this exclusive content for you, and appreciate any donations made to the FTA to help keep these episodes coming at you. And if you want all the content, become a GRT Network full member to get exclusive content before everyone else and access to special discounts and giveaways through our amazing global partners. Thanks guys, see you next episode.